Hello everyone, today is the 29th of July 2026 and the past 48 hours have been incredible to say the least in the crude oil market and in the stock market. Let us first take a look at what happened in the crude oil market. On Sunday, during episode 87 of Just Dario's Cigar Time, I highlighted how crude oil price manipulation was already strong heading into the weekend. Now observe what happened when crude oil futures trading resumed on Sunday at 6 p.m. Eastern Time in the chart in front of you. The reckless manipulation continued until Tuesday at 12 p.m. Eastern Time. And while crude oil prices were free falling, in the real world, Saudi Aramco announced that the Jazan refinery shut down after a Houthi missile strike, suspending operation at their 400,000 barrel per day refinery following the attack on July 27. The Houthi launched another missile strike on a Saudi oil tanker and claimed other successful attacks on Aramco oil infrastructure. They specifically targeted Saudi Aramco's Yanbu terminal and the strategically important infrastructure for the global oil supply, Abu Dhabi massive oil complex refines about 7 million barrels of crude oil a day, roughly 5% of the global oil supply. Furthermore, the Houthis even claimed a successful strike on the critical east-west pipeline pumping stations. This pipeline has been used to redirect crude oil previously exported through the Strait of Hormuz, helping to partially ease the oil supply disruptions till today, when a blockade of the Bab-el-Mandeb Strait is also in force. Saudi Arabia only officially acknowledged these attacks partially and tried to minimize the damage. However, compelling visual information circulating on social media proved the complete opposite. The Jazan refinery was only officially shut down after 72 hours, despite images of large fire spreading. A great example of how information is managed to avoid unwanted shocks in the oil market. There will likely be similar announcements from Aramco in the near future. While all this I described was happening, the crude oil market was busy pretending everything was fine. Remember, when prices are manipulated, mainstream media will always look for a fitting narrative. They will not accept reality or make themselves enemies of the administration, not endorsing these maneuvers heavily impacting market prices. The narrative claimed progress in peace negotiations between Iran and the US until Tuesday, even if Iran publicly denied the claims on Monday, highlighting that the retaliatory attacks on US military positions were just being posed. Iran clearly stated that their actions should not be considered a ceasefire whatsoever. The crude oil price manipulation factory continued pushing hard to crush the price further. Nevertheless, more ridiculous headlines emerged, with peak idiocy reached around 12 p.m. Eastern Time on Tuesday. This perfectly coincided with Prime Minister Netanyahu meeting President Trump at the White House, when a news hit the tape to trigger a significant crash in crude oil prices and a knee-jerk bid that triggered an intraday rally in US stocks that were falling for a completely different reason. Reading the news, you could immediately understand how fake it was. But you have to think like an algorithm, not a human, to understand what is really going on. Headlines and articles are carefully crafted to trigger specific algorithmic trading reactions at specific times. Here is what the Times of Israel reported word by word at 12 p.m. on Tuesday. Ahead of Prime Minister Benjamin Netanyahu meeting with US President Donald Trump on Tuesday, mediators believed they were close to a breakthrough that would revive the Memorandum of Understanding signed by the US and Iran last month. An Arab official and a second source familiar with the matter told the Times of Israel. However, the intermediaries were awaiting a final decision from Trump after his meeting with the Israeli leader. Mediators from Pakistan, Egypt, and Qatar have been discussing a proposal that would clarify this agreement regarding operations of the Strait of Hormuz, the two sources said on Monday night. Iran maintains that the MOU granted it a level of control over the strait, while the US has argued otherwise. Isn't this the same news recycled over and over again in the past 2 months? Yes, it is. It is the same recycled news used as a cover up for crude oil price manipulation. Hours earlier, the Wall Street Journal, Reuters, Fox News, and others jumped on the same bandwagon. They all threw gasoline on the oil crash manipulation with similar headlines. This is what I told my premium subscribers on Slice in real time. Iran can even make a public statement and deny any conversation with the US now, as they did yesterday. But till they won't fire the next missile, trading algorithms that, let's not forget, push the price in a direction that then creates the narrative, not the opposite, won't react to that, as it is clear they are not being wired to. Literally 20 minutes later, Iran's deputy foreign minister denied negotiation requests from the US in the past 15 days. This news stopped the crude oil price from free falling, but did not trigger a complete reversal. As I expected, the Iranian forces finally launched a surprise attack at 5:45 p.m. Eastern Time on Tuesday toward US bases in Jordan and Saudi Arabia, and trading algorithms could no longer ignore the developments, so the price turned higher. This broke the strong effort to manufacture downward momentum that began last Friday. This is an example of the premium content that updates my subscribers on Slice have access to. If you are interested in joining my growing community, premium analysis and trade ideas, you will find the link in the description of this video. Now I want to conclude the first part of today's update by highlighting how cracked spreads remain the perfect yardstick to measure the extent of the crude oil price manipulation. As you can see in this chart, 3-to-1 cracked spreads are on the verge of breaking new all-time highs. We are surpassing levels reached in 2022 when the US first used the SPR to manipulate prices. As I highlighted in my videos months ago, that effort was successful because at that time we were not in an oil supply crisis whatsoever. Today is very different, and we have crack spreads at all-time high, while governments are running out of SPR buffer to maintain crude oil prices artificially low. The US SPR is now left with only 307 million barrels of crude oil. We are approaching the 300 million threshold, after which structural problems can occur, and the US government might be forced to stop SPR releases to maintain the integrity of the salt caverns. Even if, of course, they already claim, for the benefit of markets, that the SPR could be drained to 70 million barrels if needed. Before the second part of today's podcast, don't forget to like the video, subscribe to my channel, and turn on the notifications if you don't want to miss my future updates. Now it's time to share an update on the state of the I bubble. As you know, I've been warning video after video for months about the unraveling of it. There is now little room to reinflate the AI bubble back up because fear is spreading among investors and lenders. I wrote an article yesterday titled "The AI Stocks Party is Over, and Now the Hangover Begins." You should read it if you have time. You will find the link in the description of this video as well. But here are two important things I said and that I want to highlight for you today. First, after years of partying and out of control euphoria, regulators not only did nothing to rein in excessive speculation that translated into companies priced at asinine multiples, but also supported the euphoria by authorizing an indecent number of double-levered, triple-levered, and all sorts of highly speculative schemes and ETFs. What happened recently in Korea, with hundreds of thousands of investors losing everything and and the regulator only acting when the damage was already done. Banning new listings of single stock leveraged ETFs is a preview of what's going to happen in the rest of the world, especially in the US stock market. Second, investors and lenders now ask three simple but key questions to all AI related companies. Why aren't you making money after all these massive capital expenditures? Why should I finance even more spending when you are failing to deliver revenues? And third, do your clients realistically have the money to pay for the tens of billions, if not hundreds of billions of dollars of services they booked with you? I warn that failure to answer these questions clearly will result in ugly market reactions. We saw this after Google and Intel Q2 earnings last week, and now with SK Hynix results. SK Hynix posted an incredible second quarter, but missed expectations, and the stock is crashing 15% as I record this update. This is driving the Korean market into an extremely dangerous capitulation phase of the bubble burst. I flagged this would happen, though I didn't myself expect it to arrive so soon. Thanks for listening to my update today, for subscribing to my premium slice portal, for supporting me on X, and reading my analysis on justdario.com. I wish everyone a nice day and good luck. Bye.